Welcome to FX Options University, recorded live at the International Securities Exchange, the world's largest equity options exchange. Join the industry's top trading professionals as they provide insight and strategies for trading in the currency markets using FX options. FX options are a low-risk alternative to hedging currency moves in any market condition.
Okay, so question from Francois. Wouldn't a straddle strangle be safer in a volatile market? So I assume you mean like a long straddle or strangle, Francois? I don't know about quote-unquote safer, but could be very interesting. The disadvantage with a with a long straddle, for example. So let's take since we're looking at EUU, let's or you know what? Let's shift it around a little bit. We'll use a different one as our example. CDD. This is the symbol for the index that tracks the dollar CAD, exchange rate. So currency options here is basically trading the relationship between the dollar and the Canadian dollar. And right now it costs $1.06 Canadian to buy $1 US. So the Canadian dollar has been weakening here lately, and the Canadian dollar is very, very correlated with commodities. So commodities falling, oil specifically falling so dramatically has been a bad thing for the Canadian dollar. So let's say it's at 106.75. Let's say we were trading the 107 straddle, which I actually even looked at earlier today, so that's why I'm using this as an example. So the 107 straddle expiring in July. Well, the disadvantage here, of course, is that it's going to cost us a lot. So when I quoted this one, it was $5 for that particular trade. So what's the advantage? Well, the advantage is, as Francois suggested, is that the market's really, really volatile. If it continues to be volatile, at least in the short term, we could wind up big winners, right? I mean, if the market goes way up to 114 or way back down to parity at 100, this could really work out in our favor. The disadvantage is that it costs us a lot to get in the trade. So every day, at 107, most of this $5 is time value. It's that implied volatility. So, everybody knows the market's really volatile, and everybody's nervous about it, myself included. So option prices are really inflated. So, every day this time value is kind of working against us. So I wouldn't say that it's safer, but I would say that it could be very interesting, and it could be one of those ways that we pay a little bit extra, and what do we get in return? We don't have to be right about market direction. We just have to be right about market magnitude. So, we just have to be right that volatility is coming or it's going to continue. We don't have to be right about which direction it's going to go. So it's a really good point. And I should mention that although I tend to use these examples in the context of prices by expiration, you don't have to hold a position through expiration, of course. If the market were to suddenly pop up a couple of bucks on CDD, I mean, if we were to enter this trade tomorrow morning and then, by tomorrow night we were up a couple of bucks, we might be in a profitable position on this trade and we might want to get out of it. Take those profits off the table. There's nothing stopping us from doing that. So it's a good question, Francois, and I would kind of answer it the same way I answered the other one of spreads. It's like I wouldn't necessarily say it's safer. It's just a trade-off. You're probably more likely to be right because you don't have to guess the direction, but it's going to cost you more to do it, and ultimately that higher cost may eat away at your profits. So you may be right because you didn't have to pick direction. But if the market doesn't move a lot, you could wind up, having given up a little bit of that probability for having a profit. So I would suggest that it kind of evens itself out ultimately. But it's a great question. So thanks. Okay, looks like we've got the questions answered today. So why don't we pause here? Let me make a couple of closing comments. If you're not familiar with how currencies work, and you want to dig in a little bit more, we do daily analysis on the Forex at our website, learningmarkets.com. It's all free. There's a Forex tab. You can click on that. We have videos every day that you can check out where we look at the Forex market, and you can see the prices we're talking about there. You can transpose those over to the currency option indexes like CDD or EUU, just straight across and apply long and short positions, whether you're a short-term trader or a long-term trader, through the currency options as easy as you can in the Forex market. And probably the advantage, besides, of course, it being very convenient to be able to do it within your traditional stocks and options account, so you don't have to have a separate account, but probably one of the big advantages is you can construct trades, as we've discussed today, that have a known risk. When you're trading just in the Forex itself, you have this open-ended risk. You can apply stop losses and such, but those come with their own disadvantages. So you can construct option trades that have a known risk, and we're going to pay for that. But that's the big advantage, and we can apply that in the currency options market as easily as we can in the Forex market itself. Okay, so thanks everybody. I'll turn it back over to you, Eleni, if you have some closing comments.
Thanks so much, John. It was a very, very instructive session, and it will be available in our archives. So just look out for our email tomorrow morning. It's really just going to be on www.fxoptions.com/events. And also tune in for our next session next week with Jack Crooks on the fate of the euro, profiting from the crisis. So if you have any questions for John or about today's session or anything else, just feel free to email us as well. I'm actually just typing in our email address so that everyone actually. So just definitely feel free to send us an email at ask@fxoptions.com. And we look forward to seeing you next week. And again, thanks again, John. And we look forward to having you back again in July.
Well, thanks a lot, Eleni. I appreciate it.
Have a nice evening. Thanks.
All right. See ya.
Bye.
Thank you for participating in this week's session. Please join us again next week. Get trading ideas, exchange rates, webinars, news, and commentary. Visit www.fxoptions.com. ISE FX options can be easily traded through all options-enabled brokerage accounts. These exchange-listed securities are cash-settled in U.S. dollars and have a European-style exercise.